The broadcast is now starting. All attendees are in listen-only mode.
Good morning, and thank you for joining this morning's NJCAR webinar. The Coalition's annual Office Management Controller Workshop, typically a full-day live event, has been one of our most popular training sessions for years. COVID-19 pandemic has had other ideas for us this year, so the Office Management Controller Workshop has been reimagined into a multi-module free webinar series. Today's webinar, Critical Accounting Issues Explained, is the second module. Today you will hear from Ellen Cara and Tom Walsh from Citrin Cooperman, Ken Rosenfield and Alan Ginsberg from Rosenfield and Company, and Lou Young and John Noonan from Witham Smith and Brown. Judy Van of JB Solutions and NJCAR's Jim Appleton and Anthony Anastasio are also available on the call. There will be four presentations followed by a question and answer session. Topics covered include the future of dealership accounting, how to prepare for a sales tax audit, what you need to know about unclaimed property, and dealership valuation issues. Before we begin, I just have a few quick housekeeping details. On the right-hand side of your screen is a control panel. I'd like to point out the questions tab in particular. During the call, all participants will be muted. If you have a question during the presentation, I ask you to jot it down, or you can submit it, I guess. We'll give you a 5-minute heads up when the webinar is winding down, and you can submit your question if it hasn't already been answered. Now I'd like to turn things over to Jim Appleton, who will give us a few brief opening remarks. Jim?
Good morning, everyone. Thank you, Brian. And first and foremost, thank you to today's presenters. I know that NJCAR is very grateful for your expertise, and time that you're devoting to help educate us and our members about tax and accounting issues that are going to be more challenging as we move forward. I also wanted to take the opportunity to get in front of the office managers, because I know that at the dealerships, you're the people who actually get things done. And I'm deeply concerned as the president of NJCAR that we're going to be facing serious challenges this fall again as it relates to the pandemic and potential business interruption. As many of you are aware, the struggle to get dealerships reopened last May didn't happen without the help of the dealers and a grassroots network, political action employed by NJCAR. And I'm concerned that as we move forward, we need to be vigilant about sanitization of the facilities, sanitization of vehicles, and creating a environment in which consumers and employees are safe, and the public and government officials recognize your facilities as safe, so that we're not facing shutdowns in the future. NJCAR is developing and will be rolling out shortly a detailed pandemic operations guide, and I'd like to call your attention to that. Whether you utilize the NJCAR program or you implement a program at your dealership of your own, it is critically important that dealerships take customer and employee health and safety seriously, that they implement programs that protect and safeguard health and safety of employees and customers, and just as importantly, that they demonstrate it through signage and advertising and high visibility mentions at the dealership on the website that this is what you're doing. And the reason why I say this is because we're as we face potential shutdown in the fall, I need to be able to demonstrate to public officials and to opinion leaders in this state that dealerships are taking this situation seriously, that they're implementing programs that that will safeguard the public and their employees, and that dealerships, after all, are the ultimate social distancing environment. Large showrooms, the ability to set appointments, the ability to wear masks, the ability to sanitize vehicles when people get in and get out of them. These are all tools that we can implement to ensure that we're not the subject of another business shutdown. every day I look out at the restaurant industry and how they've been unable to bounce back in this environment. And I'm grateful that we were able to get the dealerships back online, but we're not guaranteed that that's going to be the future through the fall and the end of the year. So please, if at your dealership you don't see a high visibility effort to demonstrate to your customers and your employees that you're taking their health and safety seriously, you need to talk to management, and you need to develop a program to do that. NJ Carr is helping. We're rolling out a detailed and comprehensive program we're happy to share with our members in the coming weeks. And related to this subject is our NJ Carr Political Action Network. If you haven't, if the employees at your dealership haven't, if you haven't enrolled in the NJ Carr Political Action Network, it's critically important that you do so. Again, the use of our political action, grassroots political action network, was a defining factor in getting dealerships open in the spring, and we may need to activate that network again this fall to defend the status quo. Simple and easy to enroll and to have members of your dealership team enroll in the network. All you have to do is text NJ Carr to 52886. Text NJ Carr, the letters NJCAR, to 52886. That will send you a link that will allow you to enroll in this political action network, and it will allow NJ Carr to notify you or anybody who enrolls in this network when it's time to reach out to the governor, to your legislators, to your members of Congress, or to whomever, with a message that will help defend the ability of your dealerships to continue to operate and to operate profitably and effectively. So these two commercial messages from NJ Carr: take sanitization, health and safety seriously, and make it a high visibility effort at your dealership, and have your employees, all of your employees, enroll in the NJ Carr Political Action Network. If you need help with that, you can reach out to Ann Smith at NJ Carr headquarters. Ann is our coordinator of the field, helping to enroll folks in the NJ Carr Political Action Network. And please don't hesitate to reach out to Ann Smith at NJ Carr. With that, I'll turn it over to you, Judy Van.
Okay, thank you so much, Jim. All right, well, we're going to thank everybody for participating in our office managers workshop this morning. This is our new wave, and we have a lot of participants on, and we got a lot of information to go through. So we're going to start this morning with Rosenfield and Company, and our first two speakers are going to be Ken Rosenfield. Ken began his career at a large national CPA firm in Denver, and after volunteering to work in the office's Loan Automotive dealership, he found a love for the industry. So he's worked with over 500 dealerships across the nation, including some of the largest automobile retail groups in the country. Ken is a former owner of a Ford dealership group and an extended warranty company. He has also served as the board of directors of a number of automotive retail organizations. His firm's automotive practice is one of the largest in the nation and is international in scope as well. It's going to be joined by Alan Ginsberg, who joined Rosenfield and Company in February of 2019. Alan is a graduate of City University in Brooklyn. He's a licensed CPA in both New Jersey and New York and has rich history providing tax, attention, and consulting services to the automotive industry. So we're very happy to have them with us today. We're going to be talking about the future of dealership accounting, big data, and beyond. It's going to be a look into the current trends and future of the accounting industry, the automotive industry, changing the way dealerships operate their business by taking a deep dive into data. So I'm very excited to hear their presentation. So with that, I'm going to turn it over to Ken and Alan.
Thanks, Judy.
Thank you.
Thanks to my partner, Alan. It's great having you around for the last year or so. It's been a real pleasure. And we enjoyed being in New Jersey environment. It's a very vibrant environment. I think the organization has taken a lead. We deal with many auto dealer associations throughout the country, and your organization is very progressive, and they take a really good stance on being a dealer advocate. So we're really proud to venture with you guys on this. We appreciate it. We want to talk a little bit today about DMS systems and using them in a little different manner. I don't have to explain to controllers how many charts of account line items there are and how many transactions they have and all they go through on a daily basis, and look to see how many transactions a dealership's had over a year, or course of 2 years, and if your retention goes back even farther, there's a lot of data there, and typically it's not mined very often. And up until recently, there hasn't been a whole lot of software that's been able to mine that data and manipulate it quickly. So I want to go over some basic things first. Many of you using some of the top 5 dealer DMS systems work on how to export data out, typically through Excel or Adobe. And that's a good start. Excel is a pretty decent platform to start gathering data and accumulating data and extrapolating data. But you can use something that's a lot faster and quicker that can handle a lot more data than Excel, because it does get limited. Many of you are familiar with some of the dashboard systems that are out there. Those are also a really good start. The problem with some of the dashboard systems is they're not really customizable. They're very generic, and a lot of the reports they give you are something you could probably figure out on your own. You might interpret them a little bit more graphically or something like that. So 3 of the more popular ones we see in our practice are CESA, Doc Vision, and Executive Eye. They're fairly canned programs. They integrate fairly well with your DMS systems, and they can give you a good idea of what's going on in your dealership, but they're limited in what they can do, and they kind of give you the same information they'll give any other dealer. So it's not, you customize it and it's your own data, but there's a lot of things you can't do with it. It doesn't explore, you can't import data from side of your dealership DMS system, and sometimes that's important to see what's out there. So I'm going to go over some other products that are out there. These are also off-the-shelf software. They're nothing that is it's custom programming, so that you can buy these or license these. Idea is one of them. It's just kind of think of Excel on steroids, a very powerful program. We started using this a number of years ago in our firm, and it's a very, very powerful tool for us. We can extract data from just about any DMS system. So if you have multiple DMS systems, if you have a lot of dealerships and one DMS system, this will integrate with any of them. And it's a very powerful, very fast system. Just to kind of give you an idea how quick it is, not too long ago, we examined over 400,000 items in a DMS system. It took minutes. I mean, just a matter of minutes to review that data and put it in the format we needed. And that's not what they consider big data, you know, it's 400,000 items, but it's very easy to accumulate 400,000 transactions in a dealership in a short period of time. But it just takes a matter of minutes with IDEA to examine that data. We use a graphic interpretation program. There's many out there. Power BI is another one. We like Tableau for a number of reasons. But that's more, it's not an extraction system, but it's a very interesting tool to use for graphic interpretation.
Ken, I just want to add that we've been using these systems also to assist clients in sales tax audits. And we also can expand this to help them with other types of audits as well.
We had a client in the greater New York area, and they had their system, they were using Reynolds, and unfortunately their program that they used to compose their sales tax returns was very generic. It was based in Excel. It tried to import some data, and it didn't give enough of the information that a sales tax auditor needed for the audit. So we had to basically recreate their entire transactions into a format that was acceptable to the state of New York for sales tax reporting. And after a little bit of reporting, computing time and getting it together for programming it, That maybe took a half a day or so, but once we got that done over the entire period of time, this is a number of dealerships, so it's 5 dealerships over a number, just within a matter of days, we were able to recreate all of their transactions for a number of years. So it was very, very fast processing time. Next slide. Wanted to give you some crazy ideas that you don't normally see in dashboards and things that you can gather just with a little bit different focus. So these are some things we've tried with other clients and other dealerships. They want to run, this is a very large dealer group. They wanted to see if they had any parts absorption and leakage. So we ran some exception reports to see if parts being attached to repair orders match the op codes. And so we were able to go outside of the system to see which parts would go to an op code based on their franchise, and then you could run a report that would see if a part was attached to a repair order but didn't meet that op code on that repair order. And that could give you a kind of large number, unfortunately, that's if there's some leakage or parts being coded out through repair orders that don't belong there. And it doesn't take, once it's programmed, it doesn't take a long time to do the transactions. Another item could be parts purchases outside of your franchise. So if they're have collision centers and they're buying parts, so maybe it's a Toyota dealership and they have a collision center and they're buying Audi parts or something like that, you can get a good feel for parts that would be purchased outside your franchise, what type of repair orders are attached to, and get a good idea what that is. And these are kind of things dashboard. Just doing a total scan of repair orders that might have adjustments to them, or they might have rate adjustments or discounting or things like that. You could put a number on it. So let's say if you want to see something over $50, you could run a report like that and it'll scan all your reports. Journal entries that maybe have non-system generated control numbers. We have seen this a lot, unfortunately, in our practice, where they might have like just all 9s or all Zs or sometimes funny words for a control number. And if you want to just capture anything or journal entries or items that would go into those schedules that have a non-system generated control number, you can print out a report like that and even go around those and see where the other side of those entries would have been made. So that could also be very valuable information. If they have a lot of journal entries of balance sheet accounts, you can accumulate those and schedule those out to each of your balance sheet account items to see if you have, let's say, a lot of journal entries of cash or receivables. It could generate a report that would have all those journal entries and plus the back entries and the substantiation to all those. One thing that after Helen talked about with sales tax, once it's programmed to look for items in what creates a sales tax report, it's a good way to do an inexpensive reverse sales tax audit. So if you think you have some problems, you have some outside purchases that haven't been coded correctly, you can program a search for anything you think might have to have a use tax attached to it, or make sure that the sales tax is getting collected correctly. That also creates a lot of good scans.
I just also want to add that in addition to sales tax audits, can be also used for such things as 8300 audits.
Right, we did that for a client as well. But they have over 40 dealerships, and they you could scan for that, and that whole entire scan takes less than half an hour for something like that. So they could look for entries that accumulate, so more than one entry of cash coming in for an 8300. So if they're tied together, they would create a reportable event. That they could look for those kind of things as well. Other things we look for, if like in today's environment, it's actually easier to get some big down payments. If the gross profits are something that we haven't seen realized in quite a long time, they're higher than normal. We can start looking at deals to see if they had lower down payments, what the effective gross was for new and used vehicles. And also you can look for things where those used vehicles it came from. So if they came from a different source, if you bought them at certain auctions, or they were trade-in vehicles and those kind of things, you can look to see if which type of vehicles are giving you the best gross. We've had clients ask us to see the gross profits by beacon score so they can learn to advertise correctly. So you can pull data from there, just gross profits by type of model and beacon scores. And that gives you a lot of valuable data. It helps you pinpoint some of your advertising monies. They go, if you're trying to track the type of customer that's giving you the highest gross profit, you can look and see what the beacon scores are, where they live, by your zip code, and you can capture all kinds of data from the worksheets and the workup sheets in your sales logs. We did this for one of our other clients, and this was kind of interesting. This is for your larger groups that might have dealerships all over the place. We were actually, one of the nice things about IDEA is that you can marry it with outside databases. So in this instance, we married it with NOAA, which is a national weather service. And we look to see by day, you can capture by day and look and marry it to traffic count, gross profit, what kind of vehicles sold those days, anything else by weather. And we were actually surprised to see that weather played a big impact on traffic count. And so just by marrying an outside database, this is kind of out there and a little bit off the wall, but it was information that was real helpful. And in the long run, if they know that they're coming into a wet, rainy season, they might want to stock vehicles a little differently to what's sold before, and higher grosses based on weather. And those are things like four-wheel drives or SUVs or something else, but it varied by dealership. But it's really interesting and off-the-wall kind of topic, but this is something you can do with IDEA, where you can marry different databases. This is the next item is a frozen capital computation. This is old school kind of stuff on whether your receivables are getting old, your inventory is getting aged, and those kind of things. But it's an interesting way to run your dealership to make sure that you're getting a ROI on all of your assets. We don't see it used a whole lot anymore, but some of the dashboards will do that. But it's something to just look at every day, just to help control your balance of receivables aging, inventory aging, and other investments you might have that aren't earning an ROI right away. Next slide. These some security things that you can do, and items that are also a little bit out of the box. Is look to see and do a scan of when people are accessing the system. So if somebody's accessing the system at 2 o'clock in the morning on a Sunday, you know, why are they up so late, not resting after the weekend or something, and why are they entering data into the DMS system? And sometimes you'd be surprised to see times when people are actually getting in and on the system. So a lot of times when we see that there's odd hours entering the system, they might have some bad reasons for being in there at that time. So doing a scan of when people are accessing the system and using the system could also be valuable information. Other things you can do to match up is marry customer reports and employee reports and addresses. We worked on a fraud case not too far away from New Jersey. It's just 2 rivers away. And one of the things we found was a lot of the different vendors had the same addresses. And some of the addresses are all the same as some of the employees. So just matching all those up and taking a look and see if you have customers that might owe you money, or vendors that you owe money to, and they owe you a lot of money, and help negotiate your payables and receivables, things like that. So this also is another way to catch a little monkey business sometimes. Some other reports you can run that are valuable information be wholesale loss by appraiser, who appraised the vehicle, who acquired the vehicle, which auction the vehicle was sold at, who was repping them at the auctions, or you know, where the vehicles came from and the type of vehicles. It could be anywhere from a misfire on the appraisal itself, or it could be that where the vehicles were coming from, they were buying badly, or they were going in an auction and there was some reason they weren't selling well at that specific auction. But this gives you some very valuable reports that can be used to look and see whether you're administering your wholesale activity the right way. This was we got this idea actually from one of the large publicly held dealer groups. They have a system-wide approval of $500 per repair order system-wide. Now, this is a very large group, but scale it down to your own dealership. And what they wanted to do is run a report on where anything was going mishaps with their repair orders in terms of discounting or not getting paid correctly, or parts being applied incorrectly because they weren't having any scrutiny by the dealership. So at $500, so they ran a scan of anything under $500, and guess what they found? $499 was the magic number. And there's a lot of problems with repair orders that they had in their system for $499. And so this is something else you can run, and we're going to get into something in a second on a rule that is called Benford's Law, which we'll discuss in a second, which looks for things like that. So this is a interesting type of report to run, but just look at, you want to scan repair orders or that had adjustments over a certain amount or within a certain corridor of a high and a low, and look to see what happened to those repair orders. And that can also be done very rapidly with IDEA. Also in the service department, look if there's any kind of recurrences, common occurrences by service advisors and accommodations, discounting, coupons, friends, anything like that. You can actually even get into their street or neighborhood by addresses and things, just to see if how you're managing your customer accommodations. Also look at things, we found this, one of our clients as well, specialized technician reports, where you look at efficiency analysis that the technicians might run. Sometimes in this one dealership we found where a technician wanted to keep their realization real high, and they wanted to work on just clock as many hours as they could. So that literally turning service down by special ordering parts that the dealership had in stock just to stall the vehicle from being serviced that day. And they could work on other projects that would get them a little bit more money quicker in that specific project. You know, they were the ones that were qualified by dispatch to run that repair order. So these are things you look at turned out service from technicians, where they declined to do that repair order, or they stalled it or something like that, and looked at how that impacted their pay. Recently, say in the last 6 months, we found many occurrences where parts in the counter pad weren't being reconciled to the general ledger. In some cases, these variances were huge, over hundreds of thousands of dollars. Some dealerships where they maybe weren't recording depreciation correctly, or just not at all, or there's other problems they were having in their system. So you can actually create in IDEA your own parts reconciliation program that'll reconcile your parts counter pad to your journals every day. And this can be done automatically. It's a very simple approach. And I can't tell you how upset some of our clients were when they saw the large discrepancies that occur a very short period of time between a parts counter pad and their accounting journals. So it's very easy to just generate your own parts reconciliation, and it's just on a daily basis, and it's a standard report you do every day. Other things you can do in terms of integrating other databases. If you have electronic banking, it's a great way to do your bank reconciliations automatically. You can match your cash schedules to reports from your, so you can do a bank reconciliation automatically just by importing your bank's electronic data, matching it to your internal journals, and it'll match it up every day. So it would take care of all your ACHs, any wires transfers, any accounts coming in from your manufacturers, any wires that you put out, anything like that, and it'll match it up to your journals daily. And that's it's easy to code and generate your own reconciliations there. And it'll do the same for floor plans, part statements, anything else. And another thing on the part statements is you can create exception reports for if you order special order parts and they don't get cash down payments or make appointments, you can really marry that data as well. So if you're ordering some special order parts, you want to make sure that the service department makes a reservation, you can actually pull that from your system and match all that data together at one time. I think we're on slide 5. Okay. The Bensford's Law is something that's old school, but what it does is it takes occurrences of numbers. So we have found as well, we use Bensford's Law often, is that if someone's committing fraud in a dealership, most of the time they'll use the same type of digits. And that's just, it sticks in someone's mind. So like something like a number 5 might stick in their mind. It's easy for them to go find it. They'll use the number 5. Well, Bensford's Law will go find that. So if there's an odd recurrence or number 5 comes up too many times in a section of numbers, it'll pull out, this number came up too many times, it's more than it's expected. So it's a little bit complicated. I don't want to get into it too much, but it's an automatic tool that actually can run in IDEA, and you just run it. So it's just, and you set some parameters for it. So it's putting it very simply, but it's a great tool to use for when you're looking for common theme occurrences and common traits. Next slide, I know I'm running out of time, so I have a few more minutes left. Next would be getting an ROI on your marketing. Some things we've seen, you can review customer history by gross profit, losses, beacon scores, geographic preference, how far they are from your dealership. So like how far do they have to drive, or any other type of geographic preference. You can marry this data with Polk data, the other economic data, and see if marketing in the correct places. As today, people you want to really have more focused direct marketing expense, and want to make sure you get a good return on your investment for that. You want to see your marketing correctly. So by marrying other databases such as Polk data or bank information on where beacon scores are and things like that, you want to focus your marketing there. It's a good tool to marry that data. You can data mine vehicles from other reports to your dealership to see if you're stocking vehicles, kind of like what some of the other programs out there that do this. You can pull from all different types of data. Some of the data is expensive to get, but you can get the data fairly easily. But just to see if you're pointing your marketing correctly and who's buying your vehicles and how fast they're staying in your lot. And so a lot of data. Beacon scores, very interesting data to get. The kind of beacon scores help you with your indirect finance companies, to negotiate with them to make sure you're getting a return on your relationship with them, to finance more of a certain beacon score or geographic area or something like that. Another item, something we call the sales mix analysis, that has to do with vehicle stocking, as you're stocking quality vehicles in your inventory that sell the quickest by gross profit, color, make, model, option codes, or anything else. So designing a sales mix analysis will determine that your inventory is going to be high quality and will sell the fastest at the highest gross profit. So this is a nice tool you can develop in your system to make sure you're stocking your vehicles right, and you see if you're out of balance as well. You can also, let's say you're running a special type of program, or some kind of sale, you could look at grabbing the data of who's coming in the door from your CRM system, what the gross profits are, how fast and long it takes for customers to be in your showroom. You can time it from when they first log in to the data system to when you finally sell the vehicle. So you can actually see how long it takes to sell a car in your dealership, and then tie that to your CSI scores and things like that, and get an idea of what gives you the best protocol of running clients through your dealerships. So I think we ran through our 30 minutes pretty quick. So any questions?
Okay, Ken, that was very, very informative. Alan, I don't know if you want to add anything. Brian, did we have any questions come in?
No, we did not have any yet. So if maybe have any questions regarding Alan or Ken's presentation, submit them and we'll.
Let me hear you explain it well.
Or you explained it very well, exactly. So I guess, Judy, we're switching to Ellen now.
Yes.
Okay.
So Ellen.
Okay. Okay, can you see it? Good morning. Can you see my screen?
Yes, we can.
Okay, good. Well, good morning, and thank you for inviting me to present. This is actually my very first live webinar. Be patient with me. For those of you who don't know me, my name is Ellen Kara. I'm a CPA and practice leader in the automotive field at Citron. I'm joined by Tom Walsh, who is a principal in our state and local tax department, which is really a great department that just does state and local taxes for all the Eastern Seaboard, California, every possible state you can imagine. And it's great to have him here since we're going to be talking about your worst nightmare, sales tax and the audit. It's really not that big a deal because you can really go along with your monthly work. Let me just move this up. As I told you, this is my very first, and I don't know where. I don't know how to do this. Okay, so the first slide, that's us, as you can see. You can actually go along your monthly work and do your sales tax audit without even realizing it. Set yourself up. So the New Jersey sales tax audits are CPP, which is your corporate tax, general income tax, sales tax, tire tax, and domestic security tax. They get you on everything. And the audit periods are usually 3 or 4 years. It really depends on the tax type. So I'm going to show you what the letters look like. So this is one auditor's correspondence with a client of mine. And they show you what they're going to be auditing, and they're going to tell you what they want. Don't give them everything at once. You do little by little, and very often they will not ask you for the entire laundry list of items. But there is definitely a few that are consistent. So this is what one looks like. Every auditor is different. This is what another auditor sent us. And mostly, he sent us an IDR, which is an information document request. And after he got what he wanted from there, and it wasn't everything, he asked for additional information. So it's not that big a deal. You work with your CPA and it'll go smoothly. So,
yeah. So
we know.
Just to jump in on that, I'm intimidated by that list. That list is a cookie cutter list of documentation.
I'm sorry, who's speaking?
Ellen, this is Tom.
Oh, Tom, thank you. I can't see anybody.
So that list is a cookie cutter list. One of the big things that we always try to avoid is giving the auditor more information than they need. They'll ask for way more information than they need.
Exactly.
There's no reason to hand over a complete general ledger or access to a general ledger as part of one of these audits. A rule of thumb, operate off of the trial balance. Auditors love to see numbers, and when they see a lot of activity in an account, really dig into that account. And that's when you can get them the GL detail for that particular account when they ask for it. But don't volunteer it. Don't volunteer digging into the books and records that they don't need to be looking into.
Exactly. And believe it or not, the neater your schedules are, meaning your monthly work papers, the more apt that they will not go deep dive. They really are impressed with neat and concise because they don't really want to work that hard. Believe me, this is what I've seen. So just keep everything tidy and show them how you got from point A to point B. And then they're just going to pick what they want. That's why Tom's 100% correct. Don't give them everything. So let's go to the next slide. Okay. So with sales, all the DMS systems post your deals, but garbage in, garbage out. So if a deal is posted with no tax, they're going to look at your journals. So they're going to pick deals that have no tax. Now, you don't have to worry if it's wholesale, religious, charitable, swaps, and certain diplomats. But very often there are deals that are not taxed and should have been. Especially if you buy a car or a truck from another dealer. You go to register it, but you're not paying sales tax. Many or most of the dealers aren't, and that's what they look for. They're trained to look for certain things that are going to be a slam dunk for them. This is not rocket science. So always remember that the purchaser is the end user. So if you buy a car or a truck from another dealer and you're going to put it into your, as a parts van, as a company vehicle, you're the end user. You have to pay the tax. Okay, let's go to the next slide. Okay, go ahead, Tom.
The thing to remember when going into a sales tax audit, the assumption being made by the auditor is that all sales are subject to sales tax. And it's up to the taxpayer to prove that some sales are not. And the best way to do that is to be diligent about collecting exemption certificates. Wholesale sales, you have to get that exemption certificate from the customer.
Well, we'll talk about that.
Diplomats is a difficult area to follow. There are 4 different types of diplomats. The stripes on the cards are what indicate the level of exemption that they're able to avail themselves of. It's a good rule of thumb to take a photocopy of front and back of any documentation that is shown as part of a diplomat purchase, so that when the auditor questions those exempt sales, it's easy to prove.
Okay, thanks, Tom. Are loaners and demos always a question? If the loaner is used as a loaner and the manufacturer reimburses the dealer for the cost of supplying that vehicle as part of the warranty agreement, it's not taxable. But you have to follow the rules. Now, what you can do is you can take one loaner out and put another one in and take a trade-in credit, like you would somebody trading in a car. If the dealer has a contract with a rental agency to provide free loaners, and the customer, if it's contractually entitled, then there is no tax. However, if the customer isn't contractually entitled to the loaner, the dealer has to pay the sales tax. Usually it's the warranties that are contractually entitled, not giving it to anybody just because they need a car. The other item is that the dealers may also rent cars from somebody else and give them a loaner as discretionary, but that is, if it's part of the warranty, you're fine. And it's promotional and subject to tax on the rental rate. But the demos, we all know the demos. The most important thing I can say is that technically husbands and wives of the dealers are not really supposed to have these loaners. But the tax is paid, as you know, 0.25 times the sum of the manufacturer's suggested price. You all know the formula, plus $500. Calculate it every month on your sales tax, because they will look for that. They only know certain things to look for. They're not that sophisticated. The dealer is required to notify the Division of Taxation when a vehicle is withdrawn from the stock. So that's your C1003-ST. But if you have any other questions on that, just yell. The biggest bang for the buck is your accounts payable. they look for the largest amounts. So of course, advertising. And Tom's going to talk on this because there are certain nuances about the sales tax on advertising. So Tom, why don't you take it away?
Sure. Yeah. Look, advertising is a complicated area. The raw purchase of ad space would be a non-taxable event. There's been litigation, or I mean, there's been legislation proposed most recently in Maryland and New York would begin to tax online advertisements, and you can only imagine what kind of revenue that might bring about, but we're not there yet. However, when purchasing advertising of all different types, when there's a tangible deliverable, such as a billboard, that tends to drive taxability of the entire engagement, if it's not broken out especially. So when it comes to advertising, be sure to talk to a professional about it. The auditors are operating off of a list that's say taxable and not taxable. So you can't even trust that the auditor is going to make the right call on that.
Yep.
Dig a little deeper on it. Right. Regards to out-of-state taxes, remember that there was a court case. It was called Wayfair. I think most people have heard of it just because of they noticed that they're being charged sales tax much more often than online purchases. The history with that is the sales tax was always based on physical presence. If you had a brick and mortar store in a particular state, then you had the obligation to collect tax on taxable items. That now has been changed by the Wayfair Supreme Court decision. Given that, there are thresholds that have to be made for each state. And if we're going to give it a general title, you'd be looking at something along the lines of $100,000 or 200 discrete transactions in a particular state. Once they've hit those marks, then it's time to begin collecting in that state. You've got an excess in that state. There's also a sidebar with relation to the platforms on which some people sell. Marketplace facilitators, as they're known, have been forced in many states to collect on behalf of customers selling on that platform. So you're not being charged sales tax on from a vendor that is based out of state should eventually evolve out of this conversation. But right now, for our purposes, out of state purchases tend to, well, I wouldn't say more often than not, but you still see it commonly, no taxes charged. So you have to be wary about that. Ellen, do you want to dig into?
Oh, my turn? Okay, policy. Okay, we all know tons of things get thrown to policy. But what you got to realize is that the auditors now know to look at this account called policy because they find a lot of things. If you do LOFs free of charge, you have to charge sales tax on the parts, the oil and the filters, not the labor. Outside services, everybody throws things in there. Be diligent as to what goes in there. Small tools and other supplies. A lot of times these things aren't taxed because they're vendors that also sell you parts. So everything seems to go to not be taxed and go to parts inventory or to small tools, but not be taxed. Travel and entertainment is famous. If you have non-prepared foods, that's taxed. That's taxable. I mean, prepared foods are taxable, non-prepared food or not. Your fixed assets is a biggie, which we'll get to afterwards. A lot of times people will purchase fixed assets and not pay tax. And of course, you all know about the lead generator, so I'm not even going to go into that. That's just been such a big item. But again, let me say this. If anybody has questions at any time, you don't have to be a client of our firm. We leave you with our phone numbers. You can just call and ask a question. That's all. But always check with your CPA. The biggest surprise that got me was non-original flooring. We all have to do image programs. We all do renovations to our dealerships. As a former dealer, I can attest to that. But what you don't know is the flooring in Jersey is usually one of the things that you change. And in New Jersey, if it's not the original floor, you're going to get taxed on it. So it's almost like being taxed twice. I had a client, unfortunately, this happened, and they had spent 60 grand on new tiling, and they were assessed. So keep that in mind. There are certain, I'm not going to go through them in detail, but there are certain frequently asked questions about detailing, washing, waxing. Obviously, you would put this to the vehicle, but the vendor that you pay, you have to pay tax on that if he's an outside detailer. Outside storage, this occurs in the bigger, in the cities where you don't have as much room. That's taxable. Printing or imprinting, such as your etch, taxable. Machinery and equipment that you buy, taxable. And with insurance, you can see there are different rules and regulations, which I won't go into. It's self-explanatory. Okay, parts and service. Tom started with the resale certificate. Historically, these have been kept in the parts department. And every time I do an audit, they're greasy, they're full of coffee, and half the time they don't have them. So my advice is keep them in the accounting offices alphabetically in a nice file cabinet. Because what's going to happen is one day you're going to have an audit, and I hope you don't. They're going to ask for so-and-so's resale certificate. It was an auto body shop, and guess what? They're out of business. So even though you know that they were a body shop and it wasn't taxable, the auditor doesn't know that. They're out of business. You can't get a resale certificate. You get taxed on it. So that's like an easy thing to handle. Policy, as I said before, the LOFs, the filters, and the oil are taxable. So if they're contractually obligated to do this at no charge, then there's no sales tax. But if you give it away free, there's sales tax. And again, with service, they're going to look at your journals, and they're going to ask you to pull ROs that don't have tax. Check your ROs, because they will get you on many. Next slide, fixed assets. Okay, you have construction, you have capital improvements. That is not taxable to you. The tax comes to you through your contractor. But again, the furniture and the fixtures that you purchase outside of that is taxable, because you don't know, except if the contractor purchases it for you, but generally you purchase your own furniture and fixtures.
So as we provided on that, on the samples earlier on, there's the listing of the depreciation schedule. What they're after is your recently made capital expenditures. Typically, if you do a big enough job, you're going to have a separate binder for that type of thing. When it comes to improvements, contractors love to throw around capital improvement certificates. They're not always correct when they do so. So you must remember that a capital improvement, for it to be considered exempt, an exempt installation, for instance, the items are meant to be permanent. If they were removed, they cause significant damage. They increase the value of the property. Those type of things. The New Jersey has come out with guidance that when it comes to leased property, nothing can be considered a capital improvement, because if you've signed a lease, it's typical that you're supposed to take whatever was there with you when you leave. If that's the terms of the lease, that undermines everything that you have to say when it comes to an exempt capital improvement. That's the fight that you hire your professionals to fight for you. There are definitely permanent installations that can be part of a lease. It just needs to be pushed they're looking for a settlement somewhere in the middle, between 100% of the installation and something after that. So just bear in mind that don't trust 100% of what the auditor may be saying, because they may not be correct on that.
Okay, so I've listed some quick reference items that people have always asked us about. They're self-explanatory. If you have any questions, again, feel free to call us. We'll explain. Okay.
Yeah, you know what? I want to just make mention of the lead generator thing. So not many states will tax lead generation, but New Jersey and New York, they're, say, sister states in their sales tax laws for the most part. They have a classification called an information service. And New Jersey actually is very specific in their guidance and point out that lead generators are considered a taxable information service. So be wary of that. In addition to that, on the mailers, so the sales tax is a destination tax. And if you were operating a dealership that is sending mailers beyond New Jersey, those should not be subject to New Jersey sales tax. They may be subject to Pennsylvania's or New York's if they're going over there, and you have Nexus, then you would have a responsibility to those states for those mailings. But if you're a dealership that is centrally located in New Jersey, you should focus that tax on simply those mailers that remain in the state.
Okay, so I think that concludes our presentation. Any questions? Where's the question thing?
I have Ellen and Tom, there is one question here. We can do that while we're getting ready to switch back to Judy and our final presentations of the day. Here's the question. If a customer trades in a car and before we can change the vehicle from the customer's name to inventory, if the RO for reconditioning is left in the customer's name, does this pose a problem during an audit since tax is not charged? I know it's kind of a long.
Well, the thing is, when somebody trades in a car and you recondition it, can you just read the second half of the question again?
If the RO for reconditioning is left in the customer's name, does this pose a problem during an audit since tax is not charged?
It shouldn't be left in the customer's name, because when you trade in the car, you give it a new stock number. Some people put a T at the end, or somebody gives it a totally different stock number. So I have yet to see anybody have a problem with that. But my assumption is that you have a trail. You have a paper trail. The car came in, you can show the deal, you can show the trade. We can make an argument for that, and I think it's easy to see. So I wouldn't worry about it. Just quickly put it into your stock and change the stock number. Shouldn't be. Automate does have that problem sometimes, though, I will say. But it shouldn't be a problem.
And then there was
any other questions?
One more process question. Can you let me know if you still have to mail in the 8,300, or is there a way to do it online?
Oh, yeah. They are all doing it online now. You should do it online because it's them against you. It's not, that's a FinCEN audit. That's a federal audit, but I'll definitely field that question. Do it online, because then you can prove that you sent it in on time. You must fill out that 8,300 completely. If you find that they will not give you their license, their passport, you have to mark it as a suspicious transaction. But anybody who wants to know, all you have to do is go online. You will see the new form and just fill it out completely. It's your best way to do it.
Great.
Any more questions?
Nope. I think that's it for now. We may have some at the end, but.
Okay.
Thank you so much for letting me present.
Your first
all right.
live,
If anybody has any other questions.
Exciting, yeah. Thank you so much.
If anybody has any other questions, please type them in.
Sure.
Thank you, Ellen. Thank you, Tom. We appreciate your presentation. So now we're going to switch to Witham, Smith & Brown, and we're going to start with Lou Young. And Lou is the Director of Client Services with Witham, Smith & Brown. He manages business practice issues, regulatory oversight issues, and state tax compliance. And he also provides assistance with business brokering and business development. He is been engaged to perform valuations primarily of closely held companies and family limited partnerships, and works very closely in the automotive sector with him. And then we also have John Noonan, who is a partner with more than 30 years of experience in public accounting, specializing in the automotive industry and small businesses. So we thank you, Lou and John, for joining us today. And Lou is going to start with the PPP loan forgiveness. Apparently, there's a lot of issues with that right now that he would like to cover with us. And then John is going to take over for there. So I'm going to turn it over to Lou.
Thanks, Judy. You can hear me?
Yes.
Yeah, I guess one of the things to add to the list lately has been the the SBA PPP loan and loan forgiveness process. We've been getting a lot of calls, a lot of requests for information regarding the PPP loan. We've talked to a number of dealers in the last few days who are now looking at where they are in terms of being able to apply for forgiveness. So, you know, Jim and Anthony thought that maybe we should cover this today, and perhaps at some point, if Congress does pass something soon, we would do a longer presentation. But again, cover some of the issues today that are popping up today and over the last few days. As you can see, we are all waiting for further guidance from the banks at this point. The banks are setting up portals so that people can apply for forgiveness. We have not seen anything set up at this point. Like I said, we're still waiting to see what they will come up with. And again, they are waiting as well for guidance from the SBA, as well as any possible legislation to amend the current program. So we're all in this period now where we're in SBA purgatory, waiting to see what happens. Hopefully the ice jam breaks soon, and we'll get into you know, the ability to start applying for forgiveness. Next slide. So the main thing that people should be aware of at this point is there are two forgiveness applications out there. There's a long form and there's a short form. The short form is called the Easy Loan Application. And there are some stipulations with both of these, but with the Easy Loan Application, and I want to go over this because we're getting a lot of questions on this particular forgiveness application. And it's really made to be simple for people to use as long as they meet certain stipulations. And we've got it up on the screen here. These are the 8 lines on the Easy Loan Application. Again, the payroll costs, business mortgage interest, business rent, and business utility payments. They are the 4 lines on the form. They are the 4 main components. In the payroll costs, we have gross wages, healthcare, any employer healthcare costs, any employer contributions for retirement, as well as any employer state and local payroll taxes. So they would all be included in the payroll cost line. Mortgage interest that you have, anything that was set up prior to February 15th, rent or lease payments, particularly on property, rent on your property, utilities, gas, electric, water, telephone. So these are your 4 main expense lines on the application. Again, that makes up the total that you would be looking at to assess your potential forgiveness amounts. So for line 5, 6, and 7, again, on the easy form, you're adding up, for line 5, you're adding up 1, 2, 3, and 4 to get your total, which is your potential amount. You've got line 6, which is your loan amount, and you've got line 7, which is taking your payroll costs and dividing it by 0.6 to get to a total. These three items, you take the lowest, the smallest of these three items, and that's what your forgiveness would be based on. So as you get past week 8, you get into weeks 14, 15, and 16, which where we are for a lot of dealerships right now, they're looking at 15 or 16 weeks worth of payroll costs and non-payroll costs. And they're seeing that in many cases, it does exceed your PPP loan amount. So either adding up the total or dividing the payroll cost by 0.6 will get you to an amount greater than your loan, your PPP loan proceed. That should be the case again for many of the dealerships out there, because they did bring people back and their payroll was high over the last 15, 16 weeks. So that's what we're seeing. Again, line 8 is simply entering the smallest of these three, and it's that simple. That's the easy form. So again, if you've got $1 million loan, you should, by week 15, 16, you should have well over $1 million in payroll costs. So either line 5 or line 7 will push you over that amount. The same is true for the long form. We'll talk about that in a second in conjunction with the next slide. So there's two items, two required certifications for the easy form. The first is, and everybody should remember these by now, there's two stipulations to adjust your payroll and non-payroll costs. An FTE reduction and a salary reduction adjustment. So as long as, for the first certification on the easy form, as long as you did not reduce anybody's salary by more than 25% during the covered period when compared to the first quarter of 2020, you would be able to certify that you can use the easy form. And again, for the purposes of this statement, employees mean only employees that did not receive during any single period during 2019 wages or salaries in an annualized rate in an amount more than $100,000. So again, there are some stipulations on these requirements. We've gone over these before. If you have any questions, we can certainly talk about it online or offline. But the salary reduction is one of the stipulations that you would have to certify you did not have any employees that had their salaries reduced by more than 25%. On the easy form, the second stipulation on the next slide is that the borrower was unable to operate during the covered period at the same level of business activity as before February 15th. And in the application, it talks about meeting the compliance with the CDC, Department of Health and Human Services, and OSHA. But again, the regulations have expanded that to stipulate that any state or local government closures that reduce business activity would apply as well. So again, to meet this requirement for the easy loan application, there are two stipulations that you would need to certify: that you didn't reduce anybody's salary by more than 25%, and that your business activity was less than, your business activity was reduced by the COVID pandemic. One thing I'm not talking about here is FTEs. So the one good thing about the easy form is that if you qualify, you don't have to make any adjustments to your forgiveness application for any full-time employees, any full-time employee adjustment. So if you had a reduction in your workforce after February 15th during the covered period compared to the beginning part of the year, that's not included. That is not an adjustment that you have to make if you use the easy form. So again, the easy form allows you to not worry about the FTE reduction and not make any adjustments for your salary reductions because you did not have any salary reductions, which is what you're certifying. Let's talk about the business activity for a second. We'll go to the next slide. Next one. So we're getting a lot of questions on business activity, the impact on business activity. And a lot of people would like to use the easy form for their forgiveness. They're having questions on whether they can check that box. And as I said, we're getting a lot of calls on this. This has come up quite a bit. And you should be in a position to be very comfortable if you're in New Jersey, New York, obviously states that were shut down by state government mandates. You want to be able to justify any certifications. You want to be able to justify the fact that your business activity did drop off. We have been seeing, as we talked about earlier, we have been seeing stronger June, July, and August, but the pandemic did affect, the business closures did affect businesses and dealerships throughout the state over the last 6 months. So these are some of the areas that we want you to focus on when you're thinking about whether your business activity has been affected. What was your sales volume as compared to your pre-COVID-19 sales volume? Did your service volume drop off in this time frame? Did your parts volume drop off during this time frame? Did you have to close any operations or any portion of your business? Did you have layoffs? Did you furlough or terminate any employees prior to applying for the PPP loan? Did you reduce employee pay or benefits? Were you forecasting layoffs, furloughs, terminations of employees due to forecasts of lower sales and service? So again, we're starting to see a pattern here. A lot of these questions can be answered, can be stipulated that business activity has fallen off, has dropped off, and you would be able to certify that, because of this drop off in business activity, you can use the easy form. Next slide. And again, you did use, what were the uses for your PPP loan? Employee retention, continuation of benefits, health insurance, retirement benefits, ancillary benefits, rehiring employees, maintaining employee wages, paying rent, utilities, and other PPP approved expenses. So you are using the PPP loan for the right things. You want to be able to, again, clarify and stipulate, in case you are audited, that you did use the PPP loan and you were in a situation where your business activity was affected by this pandemic. So It's very important to have the background that you need in case you are ever audited if you choose to use the easy form. Now, again, there's a safe harbor on the long form as well, where if you are stipulating the same thing, that business activity did drop off, on the long form, you would also get a safe harbor from using your FTE reduction adjustment. The only difference is you would be using the long form because you did have employees that had their salaries or wages reduced by more than 25%. So again, we're spending our time on the easy form today, but the long form does have some safe harbors as well for these business activity reductions. Okay, next slide. And again, you want to be able to stipulate how the PPP loan did affect your business activity. So it's very important that you can show that you were able to support your employees by taking out this loan. Again, only if it comes up, but you want to be able to show that you in fact did spend the money for the purposes that the SBA required. And again, as Jim talked about, we're still not through this. We're not really sure where we will be in the next few months. So hopefully we won't have to do any more layoffs. Hopefully we won't have to change any benefits in the future. But the PPP loan has been able to provide a bridge for many to get through this period so that we can hopefully get through this and not have to close any businesses, have any businesses affected by this in the future. But again, this story may not be over yet. The story may not be told, and we may be in a position where we will see further effects to business activity. So again, going forward, we want to watch for, talk to the banks, as I always tell everybody, communicate with the banks, find out when their portal should be up. And also, I want to point out that payroll providers, a lot of payroll providers like ADP, Paychex, do provide you with PPP loan information reports, spreadsheets that will help you fill out the forms, fill out the application properly. We've seen the forms, we've worked with ADP on this, and we've perfected it to the point where they are doing a much better job. And again, there's a possibility of additional legislation coming out. We want to make sure that any changes to the program get included. I think that's what the banks are doing right now. There's a possibility of additional expenses out there, but again, this is legislation. And there's also the possibility of some adjustments, some requirements if your loans are below $2 million. So stay tuned to Congress and these possible amendments. With that, I want to turn it over to John, and he's going to cover another current event, which is the unclaimed property audits that we're starting to see.
Okay, thank you, Lou. Good morning, everybody. I'm going to hit this at a higher level. This is something that we're seeing coming along with our New Jersey dealers. I think most everybody has heard of the unclaimed property laws. Over the last 10 years, the state of New Jersey has been sending out notices to the dealerships, asking them to comply with it. And now recently we're seeing in the past 2 or 3 years that they've started actual audits of the unclaimed property with some dealers. And we're finding that these tend to be very tedious, long, drawn-out audits lasting over a year, year and a half. It seems like the state is actually trying to learn from the first few where to look for the unclaimed property. Next slide, please. So, as we know, the Act requires that businesses in possession of property that belongs to someone else, our customers, that they turn that over to the state after a certain time period. The state does specify how long certain property has to be held before it gets turned over. The most obvious are uncashed checks, which, as we know, we have a lot of motor vehicle checks, $1, $5, maybe 30, that the customers just don't cash and they sit on our bank recs, and then maybe some people just write them off. But those are property that should be turned over to the state. Next slide, please. So in 2011, the state began to focus on the dealer's compliance, as I said, about the last 10 years. And they only had a few audits at the time. Then in 2014, they reached out to most New Jersey dealers and proposed a self-audit program to ensure their compliance with the Act. As of today, in our discussion with the state, the vast majority of dealers have not complied. There's a handful that have, but it was the self-audit was a tedious task because there was no de minimis. The state was looking for dealers to turn over even $1. If it was $1 check, they wanted you to turn that over, fill out the form, the customer's information, the last known address, and it was something that was going to require a lot of time, and I think that's what made it difficult for the dealers to swallow. We have been advising now, since the state is coming out, that the dealers consider compliance with the Act, and we've been advising them to start doing their own self-audit just to see where they stand. Next slide, please, Judy. So who's responsible for compliance? It's all New Jersey businesses and other holders. They're subject to the laws requiring them to report and remit unclaimed property to the state treasurer. This will go for out-of-state businesses also that may be subject to the New Jersey rules if the apparent owner of the unclaimed property has a last known address in New Jersey. Likewise, New Jersey dealers who have property from customers in New York or Pennsylvania would be subject to the New York, Pennsylvania, or any neighboring states, their unclaimed property laws, and would have to file with those states. Next slide, please. Okay, so what actions are required by the holder of abandoned property? They do have to notify the apparent holder of the abandoned property. The property is treated as abandoned if it has remained unclaimed for a certain period of time that is statutorily defined by property type. Generally, it's 3 years for uncashed vendor checks and 1 year for uncashed payroll checks. The holder of the abandoned property with a value of $50 or more should send a certified letter with the return receipt requested to the apparent owner at the last known address. The letter should inform the owner that the holder is in possession of unclaimed property that will be turned over to the state treasurer unless the owner claims it from the holder before a report is filed with the state. This notification should be mailed out no more than 120 days and no less than 60 days before you file the unclaimed property report. These reports need to be filed annually and the property remitted annually to the state treasurer, and then you should maintain records of the unclaimed property. Next slide, please. Thank you. What kinds of property are considered unclaimed? Common example, as we said, were the uncashed checks, including paychecks, customer credit balances where they've been issued but have not been received by the customers, unclaimed refunds, deposits, and unclaimed WEOs, even to the extent that at the time the deal was consummated with the customer, maybe we owed them certain parts or accessories for the car that they never claimed. The value of that WEO, the cost, should be remitted to the state if we cannot get it to the customer. But the statutes contain a comprehensive listing of the time frame for when the property is considered abandoned. Next slide, please. Thank you. So what are the filing and remittance requirements? We need to file the annual unclaimed report and remit unclaimed property to the state treasurer if the owner has a last known address in New Jersey and the unclaimed property report covers 12 months ending on June 30th of each year, and the due date to file it and remit it is November 1st. So we are coming up in a couple of months for the current year's report to be filed. Next slide, please. So the penalties for non-compliance are extremely harsh, as you can see here. The penalty for failure to render or report or perform other duties is imposed at a rate of $200 per day, up to a maximum of $100,000. Interest on failure to remit or deliver property on time is imposed at a rate of 10% above the 52-week T-bill rate computed from the date the property should have been paid or delivered. And penalties for willful failure to report or deliver property on time is imposed at a rate of $1,000 per day, up to a maximum of $250,000 plus 25% of the value of any property that should have been paid or delivered. As you can see, this is it almost creates a situation where dealers would be hesitant to file and then be subject to these penalties. Next slide, please, Judy. So one way to get around these penalties, and I don't mean get around, but to help you avoid those penalties, is to look into the voluntary compliance program that New Jersey has. They have started to, as I said, audit New Jersey dealers. However, if you look to get into this program ahead of time, before you get that notice, and they accept you into the program, they will go easier on you. Businesses that are non-compliant have the option to participate in the VCP as an alternative to a full compliance audit. Benefits of the program include removal of late penalties, although interest charges still apply. The reach-back period of the voluntary compliance program is 10 years from the property's statutory abandonment period. The business participating in the program must agree to report and remit unclaimed property for the reach-back period and comply with unclaimed property filings for future years. What we're finding is that you're probably going to have to go back about 14 years, and we realize that most dealers have records going back at best 7 years. And what happens is the state would be looking for you to extrapolate based on what you find in those 7 years out to 14 years. Just as they do sometimes with the sales tax audits. If they look at one period and it's a 4-year period, they might extrapolate it out over the 4-year period. We've been speaking with our dealer clients and encouraging them to consider going into this program. We know that the state is out there and they're looking at other dealerships, and as I said, it was a tedious process that it tries on the dealer staff, the accounting staff, and certainly in this time with the pandemic and not having full staffs in some places, it would be very difficult to comply with it. But we have been trying to walk some of our clients through the steps a little bit at a time, see where they are at, and then get them to apply and see if they can get in with it without having the penalties assessed on them. What we've been seeing is if you're cooperative with the state, they will go easy on the penalties, but the VCP program is probably the best way to go. And next slide. I think that was it. Okay. So again, I encourage everybody just to question, to take a look at it, see if you want to consider doing it. If you need help, we'd be happy to help. Just answer some questions, and that's it.
Thanks, John.
Okay, well, thank you to our panel. Brian, do we have any questions?
I was going to give everybody a chance if they had any questions, give them another couple seconds. As you can, I'll give people a couple. I'll try to keep things so we don't silence for 30 seconds. Give people 30 seconds or so to type in a question if they have it. The pandemic has obviously thrown this what has probably been NJCAR's biggest event after its annual meeting each year. Thrown into a little bit of disarray, but this is the second module that we've done of these office manager controller things, and I think they've gone pretty well. We've had good participation in both of them. I think there's a third one coming up in October, I believe. Judy, am I right?
Yes. Mm-hmm.
So that's great. Well, I guess you guys must have covered everything well because there aren't any questions coming in. So we'll, I guess I'll just thank Ken, Alan, Ellen, Tom, Lou, John, Jim Appleton, and Judy, obviously. Anything else you want to add, Judy?
No, again, I think that the office managers are probably, they are our most important alliance in the dealership. Thank you so much for participating in this, all of our presenters today. I know your time is very valuable. And during this time, I know information is also very valuable. So if anybody has any questions that you want to reach out to our panel here today, all of their contact information will be on our website, and these presentations, the slides will also be posted on our website, so you can go back and get the information and all their contact information so that you can contact them directly. So thank you again for participating in this Zoom, and hope to see you all. Stay safe. And thank you very much.
Yeah, the recording of the webinar will be posted this afternoon along with all the slides. So thank you very much. Thanks, everybody. Stay safe. That concludes our webinar.
Have a great day.
Bye.
Take care.
All right. Bye-bye.